Hey guys, Max here, and this is your daily market update for yesterday, the 7th of February. We're of course going to cover the markets and what happened with them. There were a couple things worth mentioning regarding crypto and Ripple in particular as well, along with a few other things to finish it off, so let's just get right into it. Now, what actually happened in the markets themselves? Well, they were stable and slightly green for the first part of the day, but as the close neared, equities took a little bit of a tumble and they ended up in the red. The S&P 500 closed down about 0.4% in the end, the Nasdaq fell 0.6% for the day. Overseas, markets were cautiously bullish, though not everywhere. The FTSE 100 finished up 0.8% for the day. The Stoxx 600 was up 0.8% as well, but the Nikkei was down 0.7%, so a mixed bag for sure. Now, why did it end up like this? Well, sentiment regarding the larger tech companies in the US continued to deteriorate as the day came and went. Google fell almost 3%, Facebook fell 5%, and Netflix fell another 2%. We're going to talk about this in a bit more detail in a moment, but basically, the same fears that we had last week, that changes in macro environments are going to impact their growth and their earnings continued, so they lost value. Of course, the Nasdaq being mostly made up of these mega cap tech companies, it fell along with them. We're also going to be getting new inflation data this week, and that is worrying for a lot of people as well, as it's probably going to be above 7%, and that's not good news, so inflation fears are not subsiding, and as a result, quantitative tightening fears have not subsided either. Now, the European Central Bank's NOT came out and talked about tightening monetary policy in Europe as well, as we spoke about yesterday, and that seemed to have an impact on markets in Europe with debt sell-off that led to increased yields. Of course, the ECB, the European Central Bank, has been notably hawkish for quite some time now, and this is the first sign that they might actually be willing to react to circumstances as they develop, as opposed to just remaining entrenched in their outdated views. Now, bond yields in the US didn't really change that much, but they are still very high compared to recent levels, with the 10-year Treasury sitting at 1.92%. The dollar had another slight decline, nothing major but a small 0.1% decline on its spot index. And as for oil, well, WTI crude is still very high, sitting at $91 a barrel, which is about $1 lower than the other day, so a slight improvement, but still very, very expensive. And gold actually saw a relatively strong day with a 0.8% rise in its price, meaning that per ounce, gold is now $1,820. Now, crypto saw another strong day, with most coins moving up between 5 and 10%. The big boys, Bitcoin and Ethereum, rose 6% each, leaving them at around $44,000 and $3,100 now, and Ripple had a pretty crazy day, a big development in the court case that led to it rising 23% yesterday alone. This is probably all due to a few pieces of news that have come out. The first, that Tesla is maybe going to accept Bitcoin as payment. The second, that KPMG, one of the big four accounting firms, is going to be keeping some cash reserves in Ethereum and Bitcoin. And then the Ripple news earlier mentioned. Now, we will come back and look at all of this in a bit in some detail, but that's just the gist of it. There were some good news, so prices rose. Now, if we start the day off with Facebook, because there have been a few developments. The first is that sentiment around the company really has collapsed over the last week. I've literally seen people say that we shouldn't even consider it a FANG company anymore because of how poor its outlook is. And while I agree that the worst is not yet upon us, and the company is likely to struggle into the future, especially with the shift to the metaverse, which I don't think will be successful at all, I think it's a little bit harsh and unfounded to claim that it's not still a mega cap tech company. Now, what are the other new developments? Well, Facebook has threatened to shut down their Facebook and Instagram services in Europe over some regulatory changes regarding the data that Facebook collects. Basically, the EU believes that if people's data is transferred over to the US and stored there, then it isn't safe, which is fair enough considering what goes over there with the NSA and just Facebook's practices as well. Now, Facebook, as a result of this, is threatening to shut down their operations entirely if they aren't allowed to store the data in the US. And to be honest, I think every person in Europe is pretty much begging Facebook to go ahead with this plan. This isn't some gotcha or some really strong point. I really don't think they have any leverage here, and I also think it would be disastrous if they were to pull their services. There are over 300 million users in Europe each, and that kind of hit would absolutely tank the company so much further. This news really isn't good for Facebook. They don't have the leverage that they need here, and they don't have the leverage that they think, and if they lose, then they'll just lose out on loads of revenue that comes from data as well, so it's pretty much a lose-lose situation for them. Now, the next development with Facebook is that they are considering rolling back their ban on election adverts prior to the 2022 midterms. Now, this ban was put in place because it led to huge amounts of criticism for the company. There were wild ads all over the site during the last few presidential elections, and Facebook was being blamed for not combating misinformation and for allowing and really profiting off of these ads. The problem is that Facebook missed earnings, so they need to change something to get back on track, and they're looking into accepting election ads again to try and make some more money. Now, this would solve that short-term problem of poor earnings growth for Facebook. It would not, however, come without a cost. I am almost certain that it would lead to increased regulatory scrutiny, and public perception of Facebook would continue to decline, which is not a good thing. Do they have much of a choice here though? They need to generate more revenue from ads, so maybe not. But either way, this is not going to be an easy decision to make. Now, Peter Thiel, a founder of PayPal and Palantir and the first external investor in Facebook, has decided to finally give up his board seat on Facebook and leave the company. He was a mentor to Zuckerberg, again, the first outside investor in the company. He helped Facebook grow into what it is today, but he's now leaving the company, which is both good and bad for Facebook. Now, the first thing to talk about is the fact that Thiel is quite controversial, and he's a prominent supporter of Trump and the right in general in the US, and this has been a little bit difficult for Facebook having him as a board member. Especially when Facebook is getting grilled by senators or congressmen, Thiel's name often comes up, and for any news site that wants to attack the company, its association with the right-wing billionaire is usually an easy target. Now, Thiel leaving the board will remove that target from Facebook's back. It will help Facebook get a little bit of a nicer name, though probably not by a whole lot. The problem is that this goes both ways. Thiel helped Facebook while it was under attack by Trump, even though Thiel himself was very critical of the company, Zuckerberg, and the decisions that they made. Now, with Thiel leaving, Facebook loses a major ally, and it also means that Thiel is free to go all out in his support of Republican lawmakers. Right now, this isn't a major problem. The Democrats are in power, but Biden is not doing well. He isn't achieving much, his polling is awful, and there's a very strong chance that Republicans find themselves back in power before long, especially if Thiel goes that way we are expecting him to, and he dedicates his time and wealth to changing politics in the US. In short, there have been lots of developments for Facebook since their poor earnings report last week, and as a result of these not being necessarily good developments, Facebook's share price has continued to decline. Yesterday alone, it fell 5%, and it's now down 30% since its earnings came out, and 41% down from its all-time highs. Now, Google as well, I think, is probably worth talking about today. They've obviously had a really strong couple years now, and they saw a similar slide to every other tech company during January and were down about 15% from their all-time highs at the lowest point, which was when their earnings were released and they were stellar, so Google pumped up 16%. Since then though, Google has been on the decline again, and since its earnings pump, it's now down 7%, which is a pretty huge figure for no real news. Now, Google is being sued in Sweden for patent infringement, I believe, but this will take ages to come to fruition, and the absolute worst case scenario is a $2 billion fine, so this probably isn't the reason for the decline. Rather, this is just some poor sentiment in the market in general. Despite how strong Google's earnings were, investors just aren't that confident that it will continue to do that well forever, especially as the economy changes when tightening starts. I'm not sure how justified this is though, to be honest. Google are a very strong company in a very strong position, and I do without a doubt expect them to decline as the rest of the markets do, but this 7% decline, almost erasing all of the gains from their earnings report, just doesn't quite add up for me. Now, Peloton is in the news again, or it will be shortly, because it's releasing earnings this week, and the consensus is for a major loss of $1.18 per share and revenue of only $1.14 billion. Now, of course, the company is in awful shape. They've had to stop production of their products because they're not selling them. There has been this talk of a takeover recently, based on really no news at all, just rumors, so the share price jumped 21% completely without rationale. Now, for people who bought into that pump, I just want to caution you about the prospect of poor earnings. If they are bad, or worse than expected even, then the company is going to get hammered and people will lose a lot of money. Now, regarding crypto and those stories I mentioned in passing earlier on, what's happening? Well, the first story is that KPMG, one of the big four accounting firms and one of the most influential companies in the developed world, its Canadian side has just bought Bitcoin and Ethereum to hold as part of its cash reserves, claiming that it's part of a maturing asset class, which is a fair point. The company didn't actually say anything about inflation and fear of dollars losing their value, and there's a chance that that came into play, but we really don't know if that is the case. Either way though, this is a big win for crypto. It's adding to the legitimacy of the industry, and one of the major bull cases in recent years has been the idea that institutions with huge amounts of money will start putting a certain amount of their cash into crypto assets, and that will drive huge amounts of demand and send prices soaring. Now, the other major news was that Tesla might be considering accepting Bitcoin as a payment again. They used to do this, but then Elon went on a tirade against energy usage of Bitcoin and changed his mind. This probably was more about Dogecoin than it was about Bitcoin, and it all fell apart a bit for Tesla, but it looks like they're coming back on side and going to start accepting it again. The price action from this change itself will be negligible, but it could encourage other companies and institutions to go in the same direction, so for that reason, it is a good thing. Finally now, we have a development with the court case between Ripple and the SEC, which seems quite positive. Very briefly, the SEC claims that Ripple sells XRP as an illegal security. Ripple claims that they don't, and they've just been granted the right to explain fair notice defense, which is a good news for their argument and could help them win their case. To be honest though, this case has been going on for, it seems like, forever, and this isn't the end, so the token pumping 30% on this news is probably a little bit premature, but I understand the sentiment behind it regardless. Now, I do really quickly want to say that I know it probably seems like I'm anti-crypto a lot of the time, purely because I think there's a lot of downside risk at the moment with interest rates rising and the like, but in the long term, the next 10 years or so, I'm actually very bullish on the industry and that market. But more than that, I actually want it to do well because decentralized finance is good for the world, it's good for humanity, and it will help to increase the degrees of freedom all over. Now, very quickly, in semiconductor news, ARM, the company that Nvidia has been trying to buy for over a year now, I think, has given up on its quest to be acquired, and it's going to go public instead. This is probably going to take some time to come to fruition, probably in 2023 at some point. It does not seem like they're going to be going the route of a SPAC, which is very nice to see, as they pretty much only exist to deceive investors, and it's probably going to be listed on the Nasdaq as well. Now, I hate to say it, but this probably isn't going to be a good time to go public. The investment environment in a year's time will be far harsher than it is today, and tech stocks have already taken a beating, so this IPO likely won't be a huge success, but the company itself is very promising, and when it does come through, when it does go public, I will definitely give it a thorough look through to see at what price it warrants an investment. Now that is it for the day. I will be back tomorrow, of course. If you enjoyed this video, then leave a like and a comment to bless the YouTube algorithm. If you want more content like this, then check out our Patreon and join our community of investors. You get access to our Discord, loads of exclusive content like insight into my portfolio and buy and sell alerts for all my own investments. It is now February, so if you've been waiting to join, now is the perfect time. There's a link in the description to masterworks.io, a site that allows you to buy fractional shares of art from world famous artists like Banksy, which can be a great way to diversify your portfolio with non-market correlated assets. It's completely free to sign up, you don't have to buy anything, you don't have to hand over any card information, so if that sounds interesting, then make sure to check it out. There's also a link in the description to BlockFi, which will give you up to $250 in free Bitcoin when you use it. You can also get 9% interest on stablecoins like USDC, which is a far higher rate than you'll get from any savings account these days. Just make sure not to use Tether. Thank you all for the support. Thanks for watching. Stay stoic. Until next time.